What's up, everyone? Welcome to the Daily Macro Update for Tuesday, September 30th. This is the last day of September as well as the last day of the quarter. Q4 of 2025 begins tomorrow, and it could open up with a high likelihood of a government shutdown. So, definitely some interesting developments happening this week. A little bit of an unexpected turn with this government shutdown. I just made a video talking about kind of my thoughts on the whole entire thing, but I don't think it'll be, even if it is a catalyst of, a sell-off. The great thing about having your own process is that you can let that lead you instead of your emotions. And so if we do have a sell-off here towards the low end of the trading range, I'm just gonna start looking for things to buy. Myself and my team personally, we've been raising cash on things that we were buying on last week's dip and that are actually up at the beginning of this week, right? And so, it is interesting how this is happening in the middle of the week. I know that a lot of people who, day trade look at the middle of the week being turning points. So, yeah, if there is a sell-off that happens for this government shutdown, I will then just use it to look for buying opportunities. But what's interesting is that the Bureau of Labor Statistics mention that if the government does shut down, that they're going to delay the release of the September labor market report or the jobs market report that is set to release on Friday. And so, who knows if they're going to release it the week after. I would assume so, but they haven't really guided on that. And so, if we do end up not even getting that data, and then we go into the October 29th Fed meeting without any type of update on the jobs market, then yeah, I mean, that could be a scenario where the Fed can just continue to cut despite inflation remaining high, as well as potentially a rebounding jobs market. Now, for myself and my team, we think that the market is going to continue to cool, and then we're actually seeing inflation starting to show signs that later on in 2025, namely around mid-November and the full month of December heading into 2026, we could see inflation start to decline from here, right? And that's actually a new development because we've been seeing how inflation has been remaining sticky. But we are starting to get some early indicators that we could continue to see disinflation. Now, before you celebrate that, what a lot of people need to understand is that if you, at the same time, you get disinflation along with a slowing economy, that can actually be a scenario that is a headwind for risk on assets, such as the S&P 500, Bitcoin, things like that. And I do also want to point out, and we'll get into the charts here in a second, that typically Bitcoin is a leading indicator of that scenario. Really the only time where Bitcoin has trouble, going up in price is when you start to have more of that recessionary type of macro environment where both, you're having, growth continue to slow or remaining stagnant, as well as inflation coming down, right? Because that compresses profit margins for companies. But also, too, if you have that at the same time as government spending trying to come down in terms of a year-over-year growth slowdown at the same time, right? So policy from the government, which has been really the thing that's been propping up markets over the past 3 years, if that starts to wane at all, that could also provide headwinds, right? And then at the same time, we're seeing a slowdown in liquidity. And so, in saying all this, there are some potential headwinds that are coming up towards the end of this year and into 2026. And we'll see how the market reacts based on that. But I think that the no landing scenario is not going to last as long as people think. And really the only way out of this is if you have a hard landing or a soft landing. Really, you can't be in this no landing scenario forever. And yeah, if we continue to get slowing market data as well as slowing inflation data, yeah, you could continue to see the Fed guide that the neutral rate is lower and therefore they'll start cutting rates more. But just like we've seen in previous past cycles, is that when the Fed starts cutting rates again, there's typically a reason why they're doing that, right? The reason why they're doing that is because they're seeing a weakening economy. And so, yeah, I just would like to keep reiterating, you want to be careful what you wish for, because right now, essentially everybody, online, retail investors, Wall Street investors, as well as the government, uh, they're all hoping and praying for continued rate cuts. And so you just have to be careful what you wish for there. With that being said, let's get into some of the market data here for today. Chicago PMI did have a slight deceleration. This is coming in to pretty much normal levels that we've seen since May of this year, so nothing too surprising there. Job openings came in slightly higher than July for August, still remaining relatively low. If you go ahead and zoom out on this, jobs openings have been continuing to decline pretty much from their peak post-pandemic around March of 2022, and they are now at levels that are more consistent with pre-pandemic levels, right? So that's pretty much normalized with job openings. When we take a look at the Dallas Fed Services Index, right? So again, I just want to point out that paying attention to service indicators is a lot more important in terms of the leading economic indicators for the economy, because the United States is more of a services-based economy. And as you can see, that re-entered into contraction after expanding really and having a positive rate of change for the previous 4 months, going all the way back to May. So that's definitely interesting there. Service revenues continue to go down. Home price index for the Case-Shiller continues to decline, as well as the other home price index for the Federal Housing Finance Agency. And then when we take a look at the jobs openings numbers here, we can see that hiring has definitely continued to go down and is now at 3.2. And this really has not been this low since June of 2024. So we have seen a considerable deceleration in hiring, but at the same time, quits has also come down. So that's also interesting. And then layoffs also remain low, right? So just taking a look at the rate of layoffs, although they have been slightly accelerating here, ever so since June of 2021. You can see that, going back in time here, with it being at 1,725, I think that's 1.7 million layoffs. That's pretty much in line with pre-pandemic levels, right? 1.7, 1.8, 1.9. So there really hasn't been a spike in layoffs at all, which is really the main concern when looking at an increase in the unemployment rate. And so, yeah, the jobs market just continues to be in a freezing pattern, right? So there's less hiring going on, not very many people are quitting, and these companies aren't laying off people, right? So it's pretty much an entire halt on the jobs market. What is interesting, though, is that when you take a look at job openings in terms of the construction sector, we've had a very large drop off here to levels that we really haven't seen since 2017. And so with this large deceleration in construction jobs, that's normally something to pay attention to, as the construction sector does front run a lot of the major economic aggregate data that we're seeing. And so we continue to see a drop off here in construction job openings. Let's see here. Total private job openings remain relatively stable at pre-pandemic levels. Again, hiring continues to fall in the private sector. Layoffs are low, and quits are continuing to decline. So in terms of the amount of available jobs that are there, it's pretty much just saying that the labor market continues to freeze, right? There's no improvements, but there's also no major deceleration just yet. We did also get the Conference Board's, what is this? The leading economic index? Or no, this is the Consumer Confidence Survey, which continued to go down. I think, let me see here if it does a little bit of a breakout. Nope. So yeah, this is nothing new, but it is interesting how, consumer confidence remains low here. If we take a look at the inflation nowcast from the Cleveland Fed, you can see that this remains near 3%, although it has come down a little bit, slightly. And then when we take a look at the target rate probabilities for the October Fed meeting, that remains at over 96% chance that they're going to cut by 25 basis points again. So looking like they're going to continue to cut here. And so when taking a look at the markets, as you can see here, gold continues higher. I posted today on our Twitter account, or X, that gold continues higher, and really, with this scenario that's going on where gold and precious metals are outperforming everything, it's like, why would I want to own anything else, right? Because when we take a look at Bitcoin versus gold, Bitcoin is in a bearish trend currently versus gold, right? So, gold over Bitcoin. And then also too, when you take a look at the S&P 500 versus gold, the S&P 500 is also bearish versus the S&P 500 is bearish versus gold. So the best performing assets to own right now is hard assets. And that's really a testament to what's actually happening in the background with the massive amount of government printing, potentially seeing conflicts escalate overseas and in the Middle East. All these different things are telling you a story. And so that's why when us as macro investors look at the entire market as an aggregate, not just focusing on equities or, Bitcoin or, cryptocurrencies, looking at, those two things, but as well as bonds, regular foreign exchanges or regular currencies, precious metals, commodities, all these different other sectors. This is all telling us a story, right? And that's why it's always helpful to, be mindful of what's happening in the macro markets and seeing how it's telling you the story, because that's really what the major trend shifts are going to tell you moving forward, right? And so, yeah, that's what we're pretty much seeing here. Taking a look at the S&P 500 ETF SPY, you can see that currently this is pushing towards the top end of the trading range. So right now, you're seeing a quarter end markup, and this is a great time to sell some near the top end of the trading range, right? And so, last Thursday or Friday, last Thursday, you had a great buying opportunity at the low end of the range. Now you have a great selling opportunity a couple trading days later. And so the market just closed, but you had a great selling opportunity there. Things like Meta, Amazon all had a pretty tough week so far this week or the past several days. Energy, I was buying a little bit of that, as well as some financials, but pretty much everything else looked like it was performing well. The biggest one today was actually the healthcare sector. So XLV was among the sectors that had the largest acceleration. And what is interesting is that when taking a look at low volatility slash kind of like, this is our proxy for more of a defensive portfolio. It is interesting how defensives have been, starting to gain some strength here versus something like, risk on assets, which are, they're still bullish trend, but they are starting to slow. Hold on, excuse me. I might have to sneeze here. Ugh. Whenever you want to sneeze, it never comes out. But so you're starting to see more of like, cyclicals as well as risk on assets, start to push a little bit sideways where some of the defensive sectors continue higher. So that is all interesting happening at the same time. But looking for opportunities in precious metals, industrial metals, base metals, that's what's going to continue higher really from now until the end of the year. Possibly getting an opportunity here in shippers as well. This is the dry bulk shipping ETF BDRY. Although this is starting to lose some trend strength here, I would like to see what happens with this on lower volumes. So this is something that I'm also paying attention to. But yeah, with that, we'll go ahead and get into some questions here with about, we'll just leave it for about like 5 more minutes. All right. Matthew Wright says, when stocks go bearish, do you start shorting? If not, do you ever place shorts? Yeah, that's a great question. Yeah, we do place shorts, or you can also buy put options, or you can even sell calls, right? There's a bunch of different ways in order to express being short something. But yeah, I mean, when something does go bearish trend, you definitely want to look for shorting opportunities. But the trick is just like when you see a bullish trend and you're trying to buy a dip, when you look at something that's in a bearish trend, you want to try and short at a time where it's near the top end of the trading range on lower volume, right? So you get that little pop, and then you get an opportunity to short some at that point. So yeah, great question. Artemis, what are you referring to in this question here? Don't you have a trick for it? Let's see. Is it a good time to take profit for silver? Well, I mean, I can't tell you what to do with your own portfolio, but following our process, yeah, yesterday, really the past 3 days have been great times to, take some profits here, and really just wait for more of a consolidation period. So, maybe after this run up, you get, something like this where, you do something like this, blah, 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 and then maybe you come up like that, right? So wouldn't be surprised if silver does something like that. But yeah, this is pretty much the huge, massive acceleration that's been going on into the year end with precious metals. So, but yeah, I mean, when something's doing this, of course it's a good time to, take some off the table, right? Especially if you're buying some all the way back here. Did they say how long the government will be shut down? No, that's there's never like a set time. It's whenever they come to an agreement, right? In 2018, they were shut down for a record 32 days. I don't think that's going to happen this time, but we'll see. I was talking about sneezing. Oh, yeah, I do have a trick for sneezing. You just think of elephants. Yeah. I was talking about sneezing, but could you have a look at liquidity? Sure. Yeah. You can pull this up on your chart as well. But, you know, typically with central bank liquidity, you do get these markdowns into quarter end close, as you can see over here, right? You got that towards the end of last year. You got that going into the end of Q2, heading into Q3. So yeah, that's kind of what we're seeing right now. But when you scroll out, you can definitely see that we could have potentially had a double top in liquidity, right? The last time it was doing this was all the way back in September of 2021, right? So we'll see. We'll see what happens. This is one of the reasons why Bitcoin has been struggling when we take a look at central bank liquidity here, right? If I go ahead and put up a chart on top of this of Bitcoin, wait a second. Yeah, so if you take a look at Bitcoin, let me make that a better color actually. Let's do light blue. Yeah, so as you can see, it doesn't follow it perfectly, but pretty much the general trend is that Bitcoin closely follows net central bank liquidity here, right? Again, it's not completely perfect, but it matches up pretty well, right? Going all the way back to 2021, the bear market of 2022, and then what we've been doing ever since then, right? So So yeah, seeing where we're at right now, I wouldn't be surprised if we do continue to see some potential headwinds, within Bitcoin's price here. But we'll see. We'll see what happens. Let me know what you think in the comments. Hermie on TikTok, I appreciate the likes. Make sure you guys are sharing the content. Also, if you guys haven't already, we just completed our new website. That's pretty much the project that I've been focusing on over the past month here, and I want to get back to making tons of content every single day. So that's part of the reason why it's been a little lagging on the content side, but I will be able to pick that back up as we just launched the new website there. So definitely check it out and let me know what you think. Oracle at the loan of the trading range. Oh, I don't think I was buying any. This is interesting. It's not yet near the loan of the trading range, but could be getting there. I'm going to give it some more breathing room. Great question, though. I thought next month Bitcoin seasonality is the highest. Seasonality doesn't matter at all. So it does to an extent, but not really. All right. Well, that's pretty much all I have for you guys here today. If you guys have any other questions, make sure to leave a comment, or you can shoot my team and I a DM on Instagram or TikTok. Just go to at Macro Optics, or I think on Instagram it's at macro.optics. But appreciate everyone for joining. Have a great rest of your day, and we will catch you on tomorrow's daily macro update. Bye, everyone.